In this video, I'm going to go over what I believe to be the best trading pan you can use. Now, in truth, this pan is used by a lot of traders, a lot of different traders with different strategies or different techniques. However, all they do is they just change the name of the pan. They just change when to use it. But all in all, the pan is just amazing regardless of what you use it in conjunction with. And it's also very simple. I'm just going to show you the pan. What you then need to do is go off and figure out a unique set of rules to pair the pan with in order for it to have a very good edge. If you just use the pan by itself, some pairs you'd be profitable and other pairs you won't. Like if you use it in Aussie dollar and you just take every single pattern with no other confluence, you would make money, but it'd be a very low strike rate. I did the numbers and I think it's like 23% strike rate. So if you pair that, and that was with a 4-to-1 risk to reward. So technically, yes, you would still make money. And I think it may have been higher. And on pound dollar, it had an even higher strike rate. Okay, but I only back tested like a year or two. But yeah, okay, you really don't just want to use it by itself. You want to use it in conjunction, but we'll cover that in a minute. And I'm just going to jump onto the charts. And another thing, I haven't actually pre-loaded any of the data yet. So I haven't actually got any examples ready to show you. I'm literally just going to jump on the charts and just find them because I know they form very often, very common. Right, so anyway, we're on the charts now. Let me just move this a little bit closer. There we go. So you can hear, hopefully. There we go. Now, we're on the charts, and I'm currently on USDM. And let me just go down here, and I'm going to show you. So all you're going to look for is that push down. That first push up, price retraces, comes back up to the double top, and then drops, right? Now, you may have seen this pattern before, probably have, but in my opinion, this pattern is the best pattern to trade because it's just so simple. It's really easy to identify, and I just personally love it. I personally call it the M pattern just because it looks like an M, and, you know, my name's Michael, so why the fuck not? But there are different variations to this pattern. It's not always going to be as clean as this. If you're an SMC trader, you would probably have your order block above here. And then what can happen a lot is price tags into the order block and then drops. But regardless, it's still a part of that M pattern. And yeah, it's just love it. So you could technically trade to the level. Like if price pushes down here, you can trade to the level, to the top, and then you can trade away from it anyway. But let's just get straight up here and I'll show you some examples straight away. Now, what you really want to look for is the larger examples. So by themselves, you're going to want to look for the larger patterns. And then if you want to take those smaller patterns, you're going to want to look for another layer of confluence to go with that. Like a key level here, a drop down, then push. Now, let me show you on USD, the old yen. You can see there's one right here. To be fair, I knew there's one here because I took it not that long ago. Let me get rid of this pen a little quickly. But you can see how price is pushed down. We've got, oh, that wasn't very nicely drawn. But you see how price pushes down? We've got that first push, a second, and then price drops. See that? And you can see you got the one touch here, second touch here, 1, 2. Price breaks just above and then drops. Perfect example. Not so many here because we're quite bullish, but like if I go back to when we were bearish, you can see like look here. Like, oh my god, look at this. Beautiful. You can see here, let me drag this across. We've had price push down, 1, 2 for the bottom, and then price pushes up and then drops. And look what happens after price drops as well. Let me just zoom in. You can see price pushes down. We get the 1, 2, and don't get me wrong, this one isn't super clean, but in most of your trading, you're not just going to get perfect trading patterns and they're not going to look super clean. It's just not going to happen. It's not realistic. Sometimes you have to read between the lines, which we can do here. But regardless, you get that second touch up here, price breaks above and then drops. And, you know, this is beautiful. It's such a nice, lovely trade. We come over here. If we take this first one, price pushes down. 1, I'm just going to get the pen tool. 1, 2, and then we got 1, 2, price drops and then pushes down. You could have caught that trade. And then what happens? We could take this as the 1, this is the 2. Price pushes back up, hits this, and then drops. Over here, I've got 1, and then I'm just going to plot it on like that too. And again, you can see how fucking amazing, how perfectly it plays out. But one thing you need to be careful of, let me just delete this, is just, if you just trade them in hindsight, you haven't done any back testing, you're going to fall into this trap where you're just always waiting for that second touch. So, like, say you were, like, here, right? Okay? You were here, and let me just play price up a little bit. One sec. Let me just, let's say you were here, right? If you haven't backtested this and you haven't like proved it to yourself, you're going to be stuck in, oh my god, is this the first touch or is this the first touch? Am I waiting for price to come back down and then come back up and have 1, 2, or is this actually my first touch here and this is my second touch? And if you don't backtest and you don't go and prove it for yourself, this is the trap you're going to fall into, because you're not going to know how to plan ahead. Because the problem is with a lot of the patterns and techniques you have, they look amazing and simple in hindsight. But when they actually play out for real, you're not going to notice that they are formed until after it's happened, right? So you need to have the confidence to understand this is the first touch, this is the second touch, and you'd be looking up here, right? Just something to be aware of, and that was something I fell into, a trap I fell into quite a lot when I first started trading. Let me just go through some other pairs just to prove that it does work. Pound dollar, I can already see like here. You can see at the minute we are very bullish. So what you need to be careful of is when it's too bullish, you don't want to look for them too much. You can do, like after we've had like a push away from like a strong double top, maybe like up here, you could look for them. Obviously they're not going to play out every single time, and I can prove that. Like here, you had this double top arc, price pushed down, and you could have taken this one here. And to be honest, I didn't draw that line on very straight. Hold on, or did it just not look straight? No, if you had it on here, you can see price broke just above. Now, if you're an SMC trader, what you would probably say is that price hit this order block here, and then price hit this, drop down. And to be fair, it dropped down far enough. Just make sure you set your order at the last low. Price doesn't have to complete out that whole pattern. It can literally just do what it's done here. Well, what it ends up doing is just pushing to the low and then pushing up. But the pattern still plays out very often, even if it does that, and you can get enough profit. What's this, like 4%? Yeah, 4%. And just think, that's halfway to a prop fund past. But there's one on pound dollar. And another thing to be aware of is there are pretty much two entries to this, right, that I would suggest looking for. There's at the wick, or there's at the order block. What you can do, you could risk 0.5 on both. Or you could give yourself a 15-minute entry. So, like, you wait for the 15 minutes price to come down and give you your retrace before entering. It's up to you. I'm just showing you this pattern. It's then your job to go and figure out the exact way you want to use it, because there's so many applications to it. And like I said, you don't really want to trade it by yourself. You want to trade it in conjunction with other complementers. But what you're going to find is if you have other complementers at the minute, if you pair this with it, you're going to have so much fun. It's so good. Like, you can see here, let me just drop this on. Impulse down, 1, 2, then price drops. You can see here, this one, impulse down, price breaks above, and as you can probably see to the left, what happens is price breaks to the order block and then drops, and we can go all the way back to another previous time, but we're quite bullish here. You can see here, to be fair, it looks messy, but 1, 2, 1, 2. I'll go to euro dollar next. I'll go for you just to prove that they're very common and they actually play out. You can see here, to be honest, obviously, because they're obviously pound correlated pairs, because they're dollar correlated pairs, they pretty much form at the exact same time, so you can take advantage of both at the same time. You see here, 1, 2, drop, and this one here, 1, 2, drop. And if we come back, I know there's a period where we were very impulsive here. You've got the one, this is a larger one, and all price does was pulls back to the order block here. You've got this one here, which was actually more of like a free touch pattern for anyone that trades patterns, but the order block is, do you know this one? No, you couldn't have taken this one. I'll be honest, I'm not going to lie. I don't think you could have got involved in this one. This one here, you could have taken if you wish to. You could have set it on here first, and then set it on here after. You could have taken this. And if I just keep going back, we're just going to keep finding more and more. You can see this one here, 1, 2. If I plot it here, you have this one down here, this smaller one. I keep pressing the wrong button. You have this one here, 1, 2. You have this one here as well, which is 1, 2. And again, if I go to Aussie dollar, New Zealand dollar, I'm pretty sure you're going to see similar ones. Let me just get rid of my fib level, sorry. You can see we got this huge one. It's actually a trade I took recently. Very, very nice trade. You could have taken the first one here also. You see this? Price like 1, 2. You can read between the lines. It doesn't have to be a perfect 2 touches at the bottom, but you can see, you could say 1, 2, price pushes up here, drops, and then what happens after it drops? You get 1, 2, breaks to the order block and pushes down, and a little one here, but this one doesn't push to the wick, so I remember not taking this. And then again, what happens? You got 1, 2, and then pushes up and then drops. So you can see this pattern is very common. Happens a lot, especially when we are bearish. So you want to be looking for it when we're bearish. Here, 1, 2. Not too many in here, to be fair, that I can see. I'm not looking too hard right now. If I go to New Zealand dollar, these are the only pairs I break. It's the same as Aussie dollar, so we got that 1, 2 here. We got the 1, 2 here. But yeah, I was only looking on the 1 hour then. Technically, these form on every single time frame. So what I would suggest doing, figuring out the entry style for you and put it with your other complements, right? And this is what you need to do. But I promise, if you're, and this really does only work, in my opinion, for sells. Buys different pattern, I believe. Buys never really hit the wick. They always break below. You could have a W, but it doesn't play out anywhere near as often, just in case you're wondering. But what you want to do is just, whatever style you're trading, just see if you can apply that pattern. And I promise you can. I pretty much promise that any of the people that are selling courses right now, they will be trading a variation of that pattern, right? Some little tips to watch out for. You don't want to take them at like a very significant low. So if you've got price at a significant low, like, I know there's an example on Aussie dollar. Like price come, let's just quickly plot this on. Price come to this low, like here. And then you can see that technically, if you could have had this on as the high, and 1, 2. But when we've come to that significant low, do you really want to risk, taking that when it's very, like, a very high chance that price just pushes up like it did here, broke above the high, and just made a new higher highs, and just followed that. So that's just one tip. Just watch out for that. And the other tip, which I did actually speak about earlier, make sure you're looking for the 2 entries at the wick and the order block, because you're going to find that they either go to one or the other, and they're more specific on each pair. So you're going to want to backtest it for each pair. But go backtest this pan, have fun with it, and I promise you'll make a lot of profit using it.